Manyavar presents CNBC TV 18's Indian business icons, leaders, trailblazers, radicals.
Well, if I go back, my parents always laid emphasis on education. So that was, I would say, the foundation. We had a small family business, and I thought that I would go back to that business. That's what was the general thought in my parents' mind also. So I did my engineering at just outside Bangalore, at what's now called the National Institute of Technology. And up to that point in time, I was set to get to the family business, which is making roofing tiles. And this was a little distance from my college, and I used to actually look after it the 4 or 5 years that I was there. So what prepared me was this business experience, nothing more than that, and a strong foundation that my parents insisted on. I think as I completed engineering, I was looking around at what do kids do once they do their engineering. And we're talking of the late 60s. They either went abroad to do a master's and then probably never came back. But then I heard that there are these two management schools which had opened in India, Institute of Management Ahmedabad and then Calcutta. So I said, why not try for these two institutions? And I actually applied to both and got into both. So it was just following what other kids are doing, looking at what was the opportunity set, and then moving. No fixed idea, but even then, the idea was I'll get back to the family business. ICICI did not come to campus in 71 when I graduated. ICICI, I think, basically asked for a few resumes, and my professor of finance, Mr. B.G. Shah, sent my resume down and told me, why don't you go and interview with them? So I came down here, and I remember I met all the doyens of, I would say, finance of those days, H.T. Parekh, Mr. H.T. Parekh, Mr. S.S. Mehta, and Mr. Narkani. So I had 3 people interviewing me. And very interestingly, the interview styles were mild by today's standards. And Mr. H.T. Parekh in particular, I think I learned a lot from the way he interacted with people. All his questions were around family, your upbringing, and around you as a person, rather than what you knew or what you did not know. Of course, they found me probably interesting enough to make me an offer. I would think the early lessons clearly came from Mr. Narkani, who was later to be our chairman of IDBI, and at SEBI as the chairman of SEBI. I learned a lot from him because I learned technical excellence from him, not only on technology but on financial matters. He probably was one of the most brilliant people that I have ever interacted with or the privilege to work under, the other being Mr. Wagul. So early days, I think clearly his stamp was all over me. B, I think what in a way ICICI taught me was ethical standards. In the sense, from day one that was not drilled into you, but you were just enveloped by it. So that became part of your DNA, as it were. I think when I went there, I had no particular, I would say, aspirations as to what I would gain out of this job. Well, I knew that I would probably create a small nest egg in terms of income. But what I saw at Asian Development Bank was, in particular, an exposure to Asia. And within that, what happens when change happens? When the momentum of change overtakes a country, what are the things that open up? And one thing clearly that I saw was when that change happens, the aspirations of the individual, the retail customer as it is of a bank, changes dramatically. He or she aspires. And that's what we actually brought back into a business proposition to ICICI in the 1990s by getting into retail products and so on and so forth. So I think in hindsight, ADB gave me an option, gave me an exposure to a whole lot of things around change in Asia and how they could impact it. When I came back, I wasn't sure what I was getting into. I knew that I was getting into my old ICICI Limited, but nothing more than that, because I didn't have an idea as to how our other businesses had grown. And indeed, they had grown, but they were yet to be scaled up. They were all nascent, that is the bank in particular. And indeed, when I came back, you found that Indian industry was going through a huge metamorphosis with the opening up that had happened, pain levels which are very high. So the initial learning and the Eureka moments came around handling challenge in terms of your own portfolio, new opportunities in terms of, let's say, this big move to technology and what technology could do to you in terms of your business, and newer businesses, opportunities in what we call universal banking, providing retail financial products, and we thought in another couple of years insurance products will open up. So you'll have a series of things that you could do. So you felt that you had opportunity now, and with that opportunity, Eureka moments kept increasing. The biggest challenge at ICICI clearly was dealing with the Indian economy, which was going through a complete change post the opening up that had happened in 1990. Our clients who were going through a lot of pain as a consequence, trying to adjust and trying to work with the authorities at that point in time to get appropriate handholding measures to put industry back on an even keel. I think that took 2-3 years of my time. But what kept me going during that period was opportunities opening up. You could raise capital. So we raised capital in the domestic market. You could raise capital in the global markets. There were challenges internally. In a sense, my extended shareholders then weren't sure that raising capital was the right thing, but I had to drive through. So that was a challenge, getting the capital equation right, getting the product equation right, getting the human skills right. So all these we handled. But the biggest challenge was the challenge faced by Indian industry, which reflected on us. And the only way out of it was make sure you had enough capital, make sure you had new products, and make sure you had new lines of business. And that's why we took consumer credit, retail loans, and then went into insurance and other businesses. I think in the 90s was a time of change, particularly in technology. And we were looking at what can banks do. And clearly, banks of those days were immersed in mainframes. And technology was very heavy in my parlance. So you needed an IT department and equipment which was very costly and so on. So we said we can't afford all these things, and we need technology which I can talk to. And I need that sort of scaling up where costs are low and you don't get locked into a particular system. So this was the technology mantra for that period of time. And having set up ICICI's first, I would say, computer in 1981, I had an idea of what I wanted and what I didn't want. What I wanted was very clear. What I wanted was something that I could work on myself or my colleagues could work on without going through an IT department. Now, at the same time, we saw that there's a whole lot of opportunity happening globally in the internet space. And I was curious, what is happening in this space? How are things evolving so fast in the US? At that time, I think it was McKinsey who invited me. I was in New York for something, and they said, why don't you come by for a day or 2-day seminar on technology and how Silicon Valley works. So I went there, and of course there was no bank there. And probably I was the only one from the financial services business. And the whole idea was how do tech startups work? And what I found was they work at speed. They work in unconventional ways. They work in small teams. They work in very young teams, people in their 20s. One question that I had asked, I still remember asking some of the people there is, why this mad rush to 90 days? What's 90 days got to do with it? And they said, look, we know that when we start a new idea, there are at least 100 people working on similar thought. Now, the one who is quickest to market, who can basically scale up what he wants to do, go through a beta test, go through a release, get it accepted, is going to win. So the first to market wins. So 90 days is the tightest we could do. So we are trying to 90 days. And I looked at how they go about doing it. And actually at that point in time, we were building something here, which is today a well-known product from ICICI called ICICI Direct. That trading engine was being built in-house. They gave me a timeline of 2 years. And probably a few tens of crores. I don't remember the exact number. In the end, we implemented it in 90 days. and we spent probably less than 5 or 6 crores. So immediately it taught me that it's a mindset. 90 days a mindset. It could be applied for anything, not only technology. And later on, of course, we applied it for several things we did. Timelines which were given as 2 years, we could crash to 70 days. For example, our US listing, when we listed on the New York Stock Exchange for the first time, I was told by our bankers 2 years, because we will write your prospectus, and then we'll have to get your accounts done as per US GAAP, and so on and so forth. But I won't go into the story, but we could do it in about 73 days or so. So timelines can be crashed with what I call the Silicon Valley mindset of speed. So one was speed in terms of time to market, and in terms of looking at technology, absorbing technology and living with it. I think there are 2 others that I would particularly, when I look back in retrospect, I find were game changers. One is, we did not believe in mainframes at all. I mentioned that, and we stuck to that even as we grew. And we said that as long as in technology there is a law called Moore's law, that the computing power doubles at a square every 2 years, and costs drop dramatically. I said, as long as Moore's law is working and the computing power is growing at a square every second year, my business is not going to grow at a square every year. No banking business can grow. So technology will always outpace me. They will grow fast. It will grow faster than what I as a bank can grow. So that probably awakening, or that knowledge, became a mantra, that you ride under the curve of technology and you will be safe. And we then had a very interesting test going on. The next part of it was whether, okay, we believe in technology. Will our customers believe in technology? And it may look, to you, what is he talking about? But this is just 10, 12 years back. There were about 100 ATMs in the country. And our big plan was we should roll out many, many more. And I had complete opposition from the team at the bank. ICICI was separate, the bank was separate. The team at the bank didn't believe that technology would be embraced by the layman, by the common person, our client, or even for that matter for any one of us, that we would not embrace technology. So there was a wall of resistance against ATMs. And I said, no, we will change perception. And why did I have to do it? Very simple. We had maybe 100 branches. And our biggest competitor, State Bank of India, had 10,000 branches. So you looked up to them. And we were given maybe license for, in those days, 50 branches a year. So I said to myself, how many centuries will it take? How many centuries, mind you, at 50 branches a year for me to get to that scale? So you need to use technology to get there. And that's why we said ATMs are non-negotiable. Technology is non-negotiable. So in the first year we said we will roll out 1,000 ATMs, where there were 100 ATMs. But I believe the customer was one step ahead of me. He was not behind ICICI Bank. He was ahead of me. And as we threw out technology, the customer lapped up technology. Whether it was ATMs or whether it was call centers in that time, and thereafter, very quick succession, internet. So from 2001, 2002 to date, I think the customer is ahead of us. And that mantra was adopt technology. And I would say if I were to add one more piece of knowledge which I gained, don't believe the customer is behind you. The customer is ahead of you. My first mentor was Mr. Narkani, who was my head of my business, project finance, when I joined in 1971. I then had the privilege to work with him as his executive assistant. He then asked me to set up the leasing department in ICICI. He sent me abroad for a few months to understand what it was. That gave me my first technology exposure, which I brought back. So I think my founding and my foundation, as it were, was with Mr. Narkani up to 84 or so when he moved on to IDBI. But then came Mr. Wagul, and I think my education continued at double speed for the next 3 or 4 years that I worked under him. I remember him calling me very early, maybe in the first his first month at ICICI, and challenging me on several things. In fact, his first challenge was even before he joined ICICI. He was just in, I would say, transition. He was to join us in a month or a few days. So he called me up one day and said, I believe Air India is bidding for a very large leasing lease of planes. Are we bidding for those? And I said, no sir, it's too big for us. So he said, why should it be too big? You take a look at it. So basically from that point onwards, horizons changed. He put you on a bigger platform. And he was again an outstanding man, in the sense I have two people who are outstandingly brilliant, and I had the privilege to work with them. Mr. Vagul is one, Mr. Narkan is the other. So the next 4 years was under him. And under him it was product expansion. So he asked me to set up the strategy function within ICICI. So I could set up a young team and start work on strategy. He asked me to look at treasury. So in a way, my own training became rounded, from project finance to setting up a new business, leasing, to looking at technology. Now he gave me treasury to run, looking at treasury, and then you move on to the next part of business, which was strategy. And during that period, I would think a whole lot of things that ICICI later did were ideated honestly by Mr. Vagul, and we worked on those ideas, and we then executed those ideas, I think, in later years. So it was a time of learning with two great mentors. We are a gender neutral organization, and that's what clearly was in everybody's mind as you went about building this business. And that gender neutrality has meant there are men and women both risen up the, let's say, ranks, as it were. But we're talking of the women leaders. I think one thing is, very early on we were very clear that we will not differentiate. So when people would tell me, oh, but this is a function where people have to work late, so women can't do it, I would straight away ask the women concerned, are you concerned about working late? And they rubbished it. And when I say late, you have to work till 2 o'clock on a project. I had frank chats. Don't you feel uncomfortable going home at 2 o'clock? And they had a straight face and said, we don't. And so how do you go home? You take a taxi. Aren't you bothered? And we're talking of 96, 97. So all decisions were, understanding the other point of view, and making, I would say, just those adjustments where, you feel you have to make the adjustment, but it is not discrimination. It is not, otherwise you run completely gender neutral organization. From recruitment, you go on merit. Thereafter, you go on meritocracy within the organization. In terms of opportunity, you make sure there is equal opportunity. Don't have any preset, mind issues where you say, oh, this cannot be done by, there are no such things. Everybody can do every job. So I think the women just performed. I don't think that anybody gave them a helping hand. And I think that's true of anywhere in the outside world. You give them discretion in terms of what they can do. Do not impose false constraints. Go by merit, and you will see several ICICI. I think for a long time, leadership traits were in a textbook. And these, again, I won't go into it. These were all textbook traits, one would call. What we found was that when circumstances change, those textbook traits need to change. I go back, one lesson I learned in building ICICI was that as your business changes, your organization structure also has to change. It cannot be cast in stone. A lot of companies make the mistake of keeping the organization structure the same and trying to do new businesses, and that leads to disaster. So with leaders, you cannot have a textbook case study of what is leadership about and adopt it. So if you look at 2008, 2009, as we were leading up to the leadership change at ICICI, you see turmoil in the financial services business. You see global turmoil in terms of countries, economies, and so on. So the challenge was, what sort of leader do you need for this world? It is completely different from the world of 2006, 2007, or going back maybe 25 years. And we found that there were several traits that were required in a leader. You needed a leader who, of course, was intelligent, agile, all those things. But now you need a leader who could work with very tight change scenarios. Change is constant. Change is happening every 6 months, every year. You needed a leader who could adapt to technology. You needed a leader who could work in a situation where things are crumbling around you, yet not crumble. So what I call the emotional quotient became very high. So of course we have several leaders with emotional quotient which is high, several leaders with strong skill sets in what they do. And I think Chanda was a very rounded person in terms of what she brought to her job and to her abilities. And one thing I remember about Chanda, and I've shared it with others, and I certainly shared it with her, is that whenever I've seen Chanda and she has a challenge, most people, when you have a challenge, your face reflects it, your body language reflects it, your shoulders droop. If you throw a challenge at Chanda and her shoulders square up, her gait gets brisker, and she is now ready and out to tackle this issue. And I've seen this through several challenges that we have had, from the 2000 to 2003 period onwards. Anything that you threw at her, she could actually, become stronger by it, and then, lead. I think that all these put together, I think, make her what she is today. A high and a low are two parts of a curve or a wave, and I don't think you will have a wave without a high and a low. So high and a low are a part of life. If it is still, I don't think you will have anything happening. If you look at the markets, you say that you want volatility. So things are going to be volatile. We are in a world which is volatile. We are in a nation which is transforming, which is volatile. Your clients are in a situation which is volatile. Your customers, that is your retail customers, have bits of information flowing which create challenges in their minds. So I think the challenges that the bank have faced are my own lows, the severe challenges, and the successes that the bank has achieved are what you celebrate and are your highs. I would think that my first high was probably listing ICICI on the New York Stock Exchange. Not because you went about and did it successfully, but because I think you got in your mind that now you can stand on your feet and raise capital as you want. Otherwise you're going to be vulnerable to a situation where, say, the domestic market did not have enough depth in terms of your capital aspirations. So that gave you the high in terms of what you achieved at that point of time, or what the organization achieved. Equally, I think the events around the Lehman time, when people misunderstood what was our exposure to Lehman, and what the whole changing situation could do to ICICI Bank, I think that troubled me a lot, and that was a low. But I must say, even in the lowest of the lows, I could calibrate, I would say, my instrumentation on the dashboard and say, I don't see anything structurally wrong with ICICI. So I will clearly put it back on an even keel. Just to put it in context, there are 2 or 3 equations that any organization needs to be sure are in sync. One is the people equation. You need to have that right. The second is your financial products, your financial performance, that equation. The third is, in today's context, your technology equation. Your technology has to be right. And the fourth and the most important one, I think, in the context of a bank, is your capital equation. You need to see that your capital is right. And I would think that we have always in ICICI or ICICI Bank try to make sure our capital is right at all times. That I can go back to 96, 97, successive raising of capital, so that you're well above what is statutorily required as capital in a banking context, so that any shock you can weather. So you calibrate that instrument panel and you find that you're okay. You make sure that you're the right people, you're the right products, your profitability remains fine, and I think you're okay as a bank. So whatever were the lows, I don't think you really thought that they were such a low that could impact you. But having said that, a high and a low is going to be part of a wave, and that wave is going to be running through an organization's life, running through an individual's life. I think what keeps me motivated is the rapid change. In this current context, it is a rapid change. When I say current context, my current context goes back to 96, 97 when I came back. The rapidity of change, the ability to live that change, ability to see that it is put into use for your organization, put into use for your customer, I think that is something that you wake up every day and say, well, this is a new tomorrow, this is a new dawn, and let's see what we can do with this. Well, at various points in time, various things have been done, but primarily it is around relaxing, listening to music, watching sport. I don't actively partake in any sport. For a long time it has been motor racing has been a sport, but I go back probably 45 years or 50 years to motor racing. So that's been something that I enjoy. I still enjoy doing that. And technology is a hobby rather than anything else. So I immerse myself in technology of all sorts, wherever, in whatever type of function. And this keeps you probably mentally young. No, I think the closest I came to was, running for and becoming the president of the student union at the NIT Surathkal when I was there. And that, I think, probably was due to, again, a lot of encouragement from my father. So I did not have an active interest in politics, and I have not had it since. And probably the reason is you are a professional, so you have gone down a particular path. And if you wanted to follow that path, I think that path probably needed to be cultivated, and which I didn't do. So my dad was a politician, and I have not been a politician, and at the moment it is so. ICICI has been a wonderful journey. My family has been a great support in this journey, and I don't see, look back, and honestly, if I look back, there's nothing that I can regret. People have asked me, was there a step that you would have reconsidered and changed? I've thought through. I don't think I would take a step back and change, because I believe at that point in time, whatever path or fork we took was the right fork. On hindsight, you might have said, oh, but wasn't that a bit too risky? You don't know that a priori, and the path we chose, I think, is a path which will lead us to success. Someone once told me that through business, through life, when you change orbits, there is friction. And I've kept that in mind, because we have in an organization, ICICI and ICICI Bank, just kept changing orbits so frequently. At that point in time, there is friction. Not in terms of your organization, probably in your organizational context also, but I'm not talking of that. But certainly in terms of how people perceive you, how people assess your success or failure, how you do as an organization. All these are frictional points, and I believe that that's something that has stayed with me, and that gives me a lot of comfort that indeed this will pass, as will that wave of highs and lows.
Manyavar presents CNBC TV 18's Indian Business Icons, Leaders, Trailblazers, Radicals.